The bears have gotten a stronger hold of the cryptocurrency market, making it more volatile and putting investors under a lot of pressure to sell. Major crypto coins have lost up to 2/3 of their value from their all-time highs. The previous crash eroded investor confidence in various crypto segments, but people on the market are optimistic about a number of things, believing that cryptocurrency could bring about a big change in the way the world's financial system works. In this video, we talk about why you should be excited about the crypto bear market and how you can take fair advantage of this volatile yet component crypto bear market opportunity. So sit tight and don't miss any portion of this video. Also, go ahead and press the like button right now and turn on the subscription notifications if you're new. Before going in depth of the topic, let's first talk about the bear market. Bear markets are extensive periods of price decline. They can be stressful, but they're also part of the investment cycle. It's important to not freak out and keep your mind on the long-term investment goals. Prolonged and severe price decreases are some of the most difficult times for any investor, especially when cryptocurrency prices drop by up to 50% in a matter of months, as they have multiple times over the decade. Unfortunately, investments lose value from time to time, and the bear markets are something we all have to deal with. When everything appears to be in the red, there are still some moves every investor should make in the crypto bear market. After all, the bear market could be an opportunity because it is possible to buy a lot of crypto for cheap prices. The first thing investors should take care of is invest one's time in research. When considering how to buy in a bear market, we normally focus on price declines. It's a common tendency for investors to be concerned about the volatility of bearish trends. That's why you should research through this time. Invest your time in studying any cryptocurrency or a variety of cryptocurrencies. The results will amaze you. Also, if you want to start with a crypto section, that's okay. Or if you can look for more investment abilities in the future to manage your digital assets risk-free. It's important that before entering the crypto bear market, you conduct an extensive study on how to make money in a bear market. You can also learn about crypto investments as a source of passive income. Even if prices fall, you must be confident that your crypto assets will generate yearly returns of more than 5%. If you set aside some of your cryptocurrency, it helps keep the network safe and ensures regular return payments. Only a logical and extensive study can get you to the finish line in cryptocurrency trading. Remember that sites driven by self-interest or esoteric sites will simply lead you astray and frustrate you. That's why you should conduct thorough prior research about it also. As an investor, you must be knowledgeable about the crypto market movements and trends. You should also be proficient enough to meet any future obstacles in the crypto market. Always rely on reliable sources and keep a close eye on the market. It is the best strategy to protect your cryptocurrency money. Moving forward, second thing you should do is buy the crypto dip using dollar cost averaging. Many traders are deceived when the cryptocurrency market becomes volatile. Potential investors should practice storing some fiat cash or stablecoins. Those who have bank accounts with expandable capital can buy the dip. Buying the dip refers to the practice of purchasing a specific quantity of cryptocurrencies whenever the market has a large bearish downturn. It's an excellent idea because the dip has always helped crypto investors. According to the crypto bear market predictions, investors should employ the notion of buying the dip during times of outstanding losses, inflation, downturn, or war. Dip buyers purchase currencies at a discount and profit later when the prices climb. After the single trade of buying the dip, the most successful approach known as dollar cost averaging is used. It means dividing your reserve cash into smaller amounts and trading with them in the future. Assume you have $1,000 in your savings account. It would be ideal if you could divide this reserve sum into 5 tranches of $200 or 10 tranches of $100. You can trade with these lower quantities while being secure. It's difficult to anticipate when a digital asset will hit its lowest point before reversing. As a result, experts suggest conserving money by not spending it all at once. It is advantageous to purchase a small amount and test the asset. If you win, go for a little more and keep going. You've probably heard the saying, don't put all your eggs in one basket. It's the same issue with all of your investments. The next thing one must do in a bear market is short selling when a certain crypto price is down. Short selling is the practice of selling an asset at a high price with the purpose of repurchasing it at a lower price later. This short-term selling allows crypto traders to make large returns in the long run as the value of their sold assets falls. Even newcomers to cryptocurrency trading will find it easier to repurchase currencies. Crypto traders, like all other traders, want to buy the asset at a low cost and sell it at a higher price. However, with crypto short selling strategies, the exact opposite is true. Shorting allows you to profit even when the market is down. What occurs is that you must borrow a specific cryptocurrency at the current market price and promptly sell it. You've now earned a high value. When prices fall, you repurchase the currency at the newly reduced market rates, then return to your broker the borrowed price. You now have a profit equal to the difference between the previous and the new market values, your selling price and your buying price. Assume that you've decided to sell 10 coins. Let's suppose at the moment the market price of a coin is $90 per unit. It will have a net worth of $900 US. At the current market price, you will borrow 10 coins from your broker. Later, if the market behaves predictably and the price of a single coin reaches $100, the total value will be $1,000. So, you'll sell at the current price of $100 per coin and pay the broker back his $900. In this way, you just made $100 from borrowing and returning. Another important strategy to overcome bear market is to diversify your investments among different crypto assets. There are already more than 17,000 cryptocurrencies available on the market. Nobody can forecast which cryptocurrency will recover first or rank highest. It is also difficult to predict how long the crypto bear market will endure. Diversifying investments across various crypto assets can be used for a variety of crypto assets. You may need to limit your trade size, which will lower your overall risk for your organization. It's not advised that you choose a cryptocurrency and invest in it. You'll have ample time to figure out which one works best for you. In such a situation, you should always look for different assets' potential, their performance history, how effectively they've recovered during critical times previously, and their upcoming roadmap announcements, which may include rebranding, a new partnership, or the launch of a mainnet. It is true that past performance of the currency is not a guarantee of a bright future, but still you get a fair idea of the current market stats. Last but not the least, don't be anxious about selling. Managing your emotions during bear market executions is challenging. According to experts, it's the most difficult aspect of moving forward with professional trading. Individuals who are unable to control their emotions will not gain from their investments. When faced with a significant price drop, you naturally desire to minimize your losses. However, doing so will not result in a profit in the long run. You should take a deep breath and remember why you invested in cryptocurrency in the first place. You're looking forward to making your life better by making more money and saving more. Profits can be significantly increased by foresight and efficient planning. Profitability is also a difficult skill to perfect. Greed can impact you, and your expectations may increase to new heights. It raises your trade risk, especially if you don't place stop losses. Analyze why prices have dropped, go deeper into the causes, and devise your own answers. Consider whether your previous conclusions are still relevant to the new market requirements. Rethink your strategy for a huge gain and act accordingly. In the end, you'll have fruitful results. To sum up the whole discussion, you can avoid resentment in the crypto bear market by following these effective techniques. Also, don't forget to cash in on your gains and maintain some cash on hand to deal with a downturn. That was all for today's video. Finally, please note that this is an instructional video and does not contain any financial recommendations. When investing, exercise extreme caution. If you enjoyed the video, please share your thoughts in the comment section, and if you're new to the channel, don't forget to subscribe. Thank you very much for taking the time to watch this video. See you in the next one. Best of luck.